Now Nifty is around that 22,500 mark. We are essentially there. What's the valuation discomfort here, sir?
No, see, the valuation, I mean, the view does not change in a month or two unless there's something major which has changed. So, I mean, if you're talking about the last couple of months, things continue to be the same, but then liquidity and the sentiment is decently high. And because of which we see that whatever corrections are there are bought into, and we see a spirited bounce back. So, from a short-term view, one needs to do a course correction. In fact, we were expecting a decent correction that didn't happen. It happened to a certain extent, but then after that, we saw extremely good bounce back. So, one needs to change the view in the short term. So, from a momentum angle, I think we can see 22,600, 700 for the Nifty. Whereas I think it's a very good support technically at about 21,700 to 21,900 band. I think that's a very good support. Only if we break that, then should we change the short-term view. Otherwise, for the time being, I think the view can be bullish up to levels of about 22,600, 700. But if you're talking from a fundamental valuation perspective, I think the discomfort is only getting higher. So I think one needs to keep that at the back of mind. And whenever you're playing for short term, please keep at least the stop losses. I mean, have an extremely strong discipline as far as the stop losses are concerned.
All right, and what are you making of this correction that we are seeing in the broader markets? Essentially the small cap index is down about 8% from its recent peak, and I mean the correction really began after SEBI recently flagged to AMFI, the mutual fund regulator, about this froth that is building up in the broader markets. And I mean the kind of correction that we have seen, even though we are seeing a bit of a bounce back, and we have spoken about it multiple times that valuations currently seem concerning, but are we in that bubble sort of a territory for the small caps and the mid caps?
See, we've been in the bubble territory for a while, if you're talking about the small cap and the mid caps. But then when money is chasing these stocks, then the bubble can even become bigger. And that's what normally happens. I mean, before it bursts, it can become bigger than what it is right now. And clearly, I think there is caution across. I mean, even the regulators are bothered about the sort of valuations which these stocks are getting. I mean, so many stocks have become multi-baggers in a very short while. When we talk of multi-baggers, we normally talk of multi-baggers over a period of time, over a couple of years. Now, here we see multi-baggers in a couple of months. So I think that is very, very concerning. But then, like I said, as long as the money is chasing these stocks, they can move up more. The bubble can become bigger, but then I think one needs to, I mean, like have your personal targets as to where, you should exit in the sense, I mean, where your greed should stop. So I think that's a choice of, every person who's investing. So I would say that just keep this at the back of the mind that we are in a bubble zone as far as this segment is concerned. So if you've made good profits, take it off the table and enjoy those profits.
All right, take off your profits off the tables. We are in bubble territory as far as the broader markets are concerned, and I think as you pointed out as well, sir, there is high liquidity in the market, and a lot of brokers now, they offer the MTF margin facility, and there is a lot of leverage, and perhaps we are, in fact, if we have not already, we are near that tipping point. But banks, they are doing well, and it's the private banks this time, especially this cohort of large private banks, ICICI, HDFC, Axis Bank, to name a few. They are seeing big moves. Mr. Baliga, what's the driver here? Valuation comfort for them, or something has changed on a fundamental level?
No, fundamental level, nothing much has changed, but I think, the way the PSU banks have moved up, especially in the last 18 months. I mean, if you go back about 4 or 5 years, I mean, PSU banks were not going anywhere. There are a lot of issues. And we had an extremely good rally in the private sector banks. But then if you see the last 18 months, it was the catch-up time. It was a rediscovery for the PSU banks. And we have seen quite a few PSU banks becoming multi-baggers. And the private sector banks were more or less where they were. We saw correction a few of them, like for example, HDFC Bank, there was extremely good correction. Again, there's a reason for that because of the merger. But now, after an extremely good rally in PSU banks, I think it's the private sector banks which are doing a bit of a catch up. And that's exactly what we're seeing right now.
Good morning, Mr. Baliga. While banks are doing well, there's another sector, non-bank finance corporations, which are not doing so well. RBI has effected intense scrutiny and back-to-back penal action against some of these NBFCs, particularly in segments which are in the unsecured loans business. Now, unsecured loans do not have any collateral in the event of a collapse, therefore they are vulnerable. Bank lending to NBFCs have shot up 16% in the past 12 months to 15 lakh crores from 13 lakh crores. Also, a crucial number, that is personal loans including credit cards, credit debt and outstanding amounts in these have surged 28.8% in the past 12 months. Now, has the RBI acted to avert a bigger crisis in the banking system? What is your take on the matter?
Absolutely, because see, I mean, if you look at the secured lending and corporate lending, I mean, that has not grown as much as what we have seen as far as the personal loans are concerned. And I mean, that clearly is I mean, a reason for worry for RBI. And I think RBI governor has mentioned this also a couple of times in the past. It's only now that we have started seeing some sort of an action. I mean, it started with Paytm and then we saw for IIFL, now we have seen for JAM. I don't know, maybe over the next couple of weeks, you'll have more such notices coming up. And I think that's one of the reasons why there is some amount of pressure on the NBFC space. And I think this will continue for a while because unless I mean some action is taken now, I mean you really can't afford to have a blowout in this space because we have seen that happening globally in 2008, and we have seen what I mean what's happened to the various economies. So I don't think we can really afford that in India. So I think it's good that RBI is taking some steps right now to at least take some action out here and cool it down to a certain extent.
So while different banks, different NBFCs have different problems, from the list that we have put out on the chart, Bank of Baroda, probably because of its size, has been ridden with internal corporate governance problems. But that has not reflected in their earnings. So do you think the bigger banks are able to absorb these issues more than other NBFC companies that are slightly smaller?
Yeah, absolutely. I mean, if your size is decently large, I mean, these issues can get absorbed. But then that doesn't absolve them of the regulatory issues which are there. So it's very much possible that they could be pulled up as far as regulatory lapses are concerned, and that could be negative from a stock perspective. So, I mean, when it comes to, picking up a stock like that, I think one should keep that in the mind.
All right, and it's very interesting the situation that is playing out. I mean, a lot of people are concerned about this regulatory crackdown that RBI has been taking on some of these lenders. I mean, if you blame RBI if they do go out and pretty much hold these companies accountable, and if they don't enough, you blame them still. But how do you see this because the issues are so broad and wide? What do you see is the recovery or the thing that RBI could do to stop these lapses in corporate governance?
No, I think like RBI should have been much more proactive. But I mean, it's better to be late than never. So at least they have started acting now. I think that's extremely positive. And when you talk about regulator, the regulator does not see from a market perspective as to what their actions will lead to market reaction. I think they need to look from a stability of the economy, stability of the sector. And that's exactly what they're doing. So, I mean, I'm totally with what RBI is doing because I think clearly, I think they are securing the future than the present.
Another company that has been in choppy waters, the stock, that is JSW Steel. Now there is news that they are going in for a joint venture, and there are stiff negotiations that are happening between Volkswagen's India operations and JSW. Volkswagen is looking towards India to develop a manufacturing hub, especially in the EV space for the global markets, exports in India in the next 15 years. Negotiations are still on. Do you see this? JSW has already been a big partner, 35% in MG Motors, which is a Chinese giant. Now, do you see this joint venture changing the fortunes of the JSW Steel stock, which is basically in choppy waters? Last 1 month, slightly in the negative. barely positive in the last 5 days or even the last 6 months. So what do you think this is going to change the fortunes of JSW in the long run?
No, difficult to say that right now because they are moving into a completely new territory. Uh, from steel to your automobiles. Now one needs to see as to whether they are going to be, decently profitable in this venture or not. So I think it's a bit early. So I think I would possibly try and wait and watch at least for the next 3 to 4 quarters as to what happens with MG. And post that, I'll take a view. As of now, I would possibly stay on the sidelines.
Do you think JSW is spreading themselves too thin? They are going into motors after steel, automobiles after steel. They are going into paints. So, do you think they are expanding in too many varied sectors all at once?
And too quickly.
And too quickly, yes, of course.
Yeah, that's what I'm afraid of. If you're spreading yourself a bit thin across various sectors, but then there are so many other groups which have actually managed that. I mean, although you can't compare them with the Reliance Group, but Reliance Group has managed that extremely well. So you can't really write off this idea, but then I think it's time to wait and watch instead of jumping in.